Hey there everyone, going to keep today's market analysis video short and sweet. Today is MLK Day, January 21st, 2019. Markets are closed. On the daily chart, you can see last week, moving pretty much straight up every single day. We have been gapping up. On Friday, we gapped up. And I've been interested, I was talking about, let's see, Thursday, if we were to break Wednesday's low, this little tiny candle here, I liked it as a short if we could have gotten below the first 15-minute bar's low. Anytime we gap down and I want to go short, if the market gaps down at the open, I let that first 15-minute bar close and then I will put my order below that. So here's what that looked like. We gapped down, put my order below that first 15-minute bar, and then we didn't trade lower, we traded higher, so there was no trade. But I'm going to keep that same sentiment going into this next week. I think we could go a little bit higher. 2,700 is a big round number, still within the 61.8, so that means the short would still be intact if we went a little bit higher. But anytime I see a gap up at highs, I start to get very, very suspicious if there's any more room for the bull run to continue. And so what I'd like to do to cover as a hedge for some of the long positions that I put on down here, longer term positions that I don't intend to get rid of at this point, is to just put on a short if we break below the low of the high bar in the pullback. So tomorrow, if we start selling off and moving lower, I'd look to put on a short just in the SPY um, or any of the SPY, Qs, Russell, Dow, just anything in the broader market to kind of help cover those longs that have rallied pretty nicely here. Um, Intraday, there's been some good setups on Tuesday last week, actually both weeks. The last 2 weeks in the trading room, caught a 10-point winner live in the room. That was pretty nice trade there on Tuesday, and then the prior one as well. So, there's been some good moves in the market, even though the ranges have been, a little bit smaller, and that's okay. What would maybe hinder things a bit or make trading a little bit more difficult is if we start moving down to the retesting the long down here and sort of bounce back in between bounce in between the short and the long. And when we get that kind of situation happening when we're between two 50% retracements, just moving back and forth, that can make for some challenging trading environments. But I don't think we'll stay here too long. We'll either start selling off and sell off hard, break the 61.8 of the long, and really start to tank, or if we start to move higher and we break this 61.8 of the upside on the short, we could either come back to a retracement long and sort of pull halfway back and then rally, or even retest this long below us, kind of make a double bottom here, and then take off higher from there. So lots of, either way, we've got a lot of room to run. I mean, 2650s to 2350s, we'll call it, 300 points. That's a pretty big range from the 50% short to the 50% long. So some resistance over here to the left. I would expect to see things start to slow down, maybe move a little bit sideways. But if we do start breaking below prior day's lows and swing lows, then I'll definitely be looking to put on a short. One last thing I wanted to touch on was the market profile. And you can see here, this is Friday's profile, heaviest in kind of the upper quarter of the day, if you will. But if we start moving lower, we should move pretty quickly to the downside. And you've heard me probably say that I like shorts a lot of times uh, the best because those short trades work a lot faster and they go to targets and they drop off a clip, usually faster than long trades do. And so as we start scrolling down and looking at these prints below us, it's very thin. There's not a lot of trade happening below us. We have the unfilled gap down at 26 35 50 75s, 26 35 75s has been a gap that's still unfilled. And even as we get down below that, more single prints. It's not until we get down to like 26.25 that we start seeing more overlapping of the market profile. So that would be my kind of initial pullback point, 26.25. If we start to sell off, and that's not that far below us, but a quick move. You got to be quick on the trigger and ready to go with these shorts on days where we start to break, come into the day, know where the prior day's high and low is, just write it down on a post-it. You can put a horizontal line on your chart, but I like to keep things as clean as possible. And that can really be helpful when you're looking at the smaller time frames, like the 512 tick chart. It's really helpful to have those bigger levels just kind of written down as a reference point, so okay, yeah, I'm in here on the 512, I'm taking all these little short retracements, but as we get down here into the third, fourth, fifth one, oh, maybe 2663 is a support level, or maybe it's the prior day's low, and at which point, if we break that low, I would expect, to really be watching for some kind of break and then a follow through. So helpful to write down the bigger levels on the day. The prior day's high, low, and close are the three key ones. So tomorrow morning, live trading as always, Tuesday. You can check that out, emoneymind.com/VIP. I hope everyone has a great week of trading, and we'll talk to you soon.